All right, team. Big week is here. We got a big one. Of course, we got Thursday's CPI report. We got the election midterm. What's going to happen? Of course, that's going to be affecting fiscal policy. We'll definitely be watching that. Palantir earnings. We'll talk about what's going on in Truth Social. Peabody. Yes, I'm talking a little bit of coal. Santa bringing some coal this year. Meta with a little bit of some layoffs. LiDAR in the news. We'll talk a little bit about what's going on. Of course, earnings this week. We got Disney on the chart. We got Take Two. We got Lyft, ATVI. We got a lot to talk about. Rise and shine, investors. It's time to get pre-market prep started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. How we doing, traders? Let's get right into the market. Let's bring on Dennis Dick. And yes, it does look like we're missing one today. Don't kill the messenger. Joel Elkanin is taking another beautiful day in, I think, northern Michigan.
Part-time trader,
wherever
man.
he is.
Yeah.
He's enjoying it. He's enjoying it.
He enjoys life.
Hey.
We never leave the office, Mitch. So, he's got to figure it out.
We got to take some lessons here. Don't sell because it looks like it's working for my man Joel.
Yep. Don't sell and take lots of time off. We don't get any time off. Me and you stuck in here because we sell. If we wouldn't sell, maybe we'd be able to take more time off. The whole what is it? Kramer says, buy Apple, don't trade Apple. I'm the opposite. I trade Apple and I'm not long it anymore. Well, I'm hedged it long term, so which is good news for me today. But overall here, what are you saying, Mitch? I mean, we come in, we're up again. Bad news from Apple. Market shrugs it off. What are your thoughts here?
Yeah, let's take a look. Of course, dollar is down, DXY down towards 110.56. Big support at 109. We'll see if it's able to hold. I think that's an important level to watch. Of course, dollar going down. We've been also watching equities going up, kind of leading that dollar also. But then you take a look at crude. Crude actually got towards 92.56 on WTI, now pulling back towards 91.76. Definitely something to watch, right? Because if we're going to get continued oil prices to go higher and higher, well, then I'm going to be really worried about Thursday's CPI report, right? Maybe it's not this report that it shows up that it's getting higher, but what if we were to go down on inflation and then come back up?
What's going on here right now? 803, weird. Something happened.
All right, I'll take a look.
Shopping
here.
around. We were kind of quiet. Chad, help us out here. Something just happened.
Yeah, I'm looking. I don't see anything
right
now.
We were really chopping. We went right on SPOOs for just a second there. We're starting to come in here now, but we chopped.
At least I'm looking around. I'm not seeing anything. If you guys see anything in the chat, please let us know. I'm sure we'll find out in a couple seconds, but looks like somebody knows something faster than we do. So we'll just be paying attention to see what hits the tape in the next couple of minutes. I got my news pulled up here. I'm not seeing anything.
We really chopped there though. So maybe it's just chop, maybe something, but it felt like a news hit, like it hit the tape. Like I'm always looking at the tape, obviously.
Yeah, definitely.
And when you see her just go bang, bang, like she really moved there for a second. It wasn't, sometimes at 8 o'clock you see the movement because it's old prints hitting, but this was not that. So anyways, we're chopping around here. Lots of news here. Lots of individual news here. Where do you want to go, Money Mitch?
All right, let's get into some of this news that's important today. Of course, we'll be watching what happens this week with the midterms, but let's go to Apple. I think that's one of the most important news that we've been focusing on, and the SPY is moving there. It's interesting. I'm going to try to find whatever that is that's moving us right now.
We're chopping around.
I don't see it.
Give us the Apple news first, because this was the news that you thought would drive the market, and it did drive the futures last night. This broke last night. Futures got hit, but again, the silver lining market that we are in here now, finds a reason to buy stocks anyways, despite Apple going lower here. What was the news on Apple from last night here, Money Mitch?
All right. So Apple says that COVID-19 restrictions in China have impacted its main iPhone 14 Pro and Max assembly facility. And of course, we kind of already knew this by Foxconn, right? And Foxconn had announced that it would revise down the outlook for Q4, so that it's working to try to resume production to its full capacity as quick as possible. They did announce that, as we've done throughout COVID-19 pandemic, we're prioritizing the health and safety of our workers in our supply chain. This came from Apple. So it looks like it's no longer a question if the iPhone production was getting hit. Now we're actually getting an answer from Apple saying, yes, they are getting hit, at least from this COVID-19 restriction that we're having in China.
Apple is bouncing back here a little bit with the overall market. Like we said, some news hit the tape here about 3-4 minutes ago because we started to show a little bit of life. It was kind of dead for the last half an hour because I've been trading and it's just starting to show life. Let's do the technicals on Apple. The Joe Alcon levels work once again. October 13th low, 134.37. Friday's low, 134.38, 1 penny apart. It bounced right on the old October low. So that's the good news for the bulls. The bad news for the bulls is the relative strength on this thing is terrible. There's been a rotation. We should talk about this rotation from the leaders from the last decade to the laggards from the last decade. That is really what you were seeing here in the U.S. markets in 2022. The leaders, the Apples, the Amazons, the Microsofts, the Googles, the Facebooks, the stocks have just been up relentlessly for the last 10 years are the ones they do not want in 2022. And it's the stocks, the energy stocks, banks have lagged, drugs have lagged, conservative stuff has lagged. That's the stuff that they're buying now. So the reason that the market, continues to show relentless, strength here, despite, the Apple weakness and the Microsoft weakness and Amazon going down every day, is rotation. And that rotation continues. It's the value trade, the move from mega cap tech, the move from, technology stocks altogether, and the move into more value names. Energy, obviously the number one driver, but we've talked about this trade in the drugs, calling the market on drugs. And obviously, you see the big moves. Lilly made a new all-time high there just on Friday, came off of it there. Amgen down for a little bit, then reverses. You can see the continued strength in certain sectors. So despite Apple showing weakness, the market no longer is dependent on what Apple and the mega cap tech is doing because it has other leadership now. This is a whole new animal from where we were in the last 10 years, Mitch.
That is for sure. And one of the things that, we got to start asking ourselves is this a longer time trade, right? Is this going to be tech going away for some time? Of course, it could be, with the high interest rates. And it's going to take a while, right, to start cutting those interest rates. It could be that this could be for the next year, even for 23. It could be more value than growth, right? And I think that now we just need to keep watching some of these other stocks, like even UNH, right? Like healthcare. And I think that, these could start taking lead. And you guys have seen how these stocks now have pulled back a little bit here. UNH, healthcare pulled back. Will these take lead again? Well, I'm going to keep watching these. Also, the banks. Banks have been really strong lately. What do you think about the bank trade?
It's the same trade. I've been buying banks. So what I've been buying on pullbacks is not technology stocks. What I've really been buying on pullbacks is value names, looking at the drug stocks on pullbacks, looking at the banks on pullbacks. It's the PE trade. The market is selling higher PE names and buying lower PE names. And this makes sense if you think about it. If we're in a higher interest rate environment, if we're in an environment where inflation is running rampant, earnings today are worth more than earnings tomorrow. So if you're looking at businesses and how to profit from that, it's cash now. Who's making cash now? Because the dollar today is going to be worth a lot more than the dollar 5 years from now if inflation stays high. So that's why technology stocks continue to get hit the hardest. Cathie Wood stocks, obviously awful 2022, positioned very poorly because you're in higher PE names or no PE names because they don't even make money. So, I think this trade could continue for a while. We have precedents here. We can look back to 2002. Obviously, interest rate thing is a whole different curveball. It doesn't compare for 2002. But we saw the tech bubble burst, in 2000, 2001, and then bottomed in 2002. It took 2 years for the tech bubble to really burst back, after the 1999 and the 90s ridiculous run up. So what happened after that? Lower PE names became back in favor, and it took a financial crisis to swing it back the other way. But for 4 or 5 years, lower PE names started to outperform. So keep that in mind when you're looking at here and, oh, when can I buy Apple? When can I buy Amazon? Maybe you're thinking about the wrong names. Maybe, like I said, I've owned Apple for the better part of a decade, and I hedged it last year. I should have hedged my entire tech portfolio. Didn't hedge. I sold the Amazon, but I rebought it, and I shouldn't have rebought it. Didn't hedge the Google. Sold to Microsoft. These are stocks that I had huge gains on. I was realizing because I thought that we may go into tougher times with higher PE names. And it was just a multiple expansion. I mean, I've talked on Apple for a long time. Trading 28 times earnings or 29 times earnings at the peak. It was a 12 or 13 PE stock for the longest time. And they were saying, well, they need to get some multiple expansion. It happened. And it was time to ring the register. And I think Apple could have, some tough times ahead of it. Now, again, things bounce. We have a double bottom in Apple. It's oversold. So it's going to have, these moments where you're going to get out. You don't have to sell in the hole usually because you usually get bounces to sell. But on pops, I think I'm selling tech. And on dips, I think I'm buying value.
And it looks like what hit the tape about 7 minutes ago. I was trying to look to see what it could be. So there was an exclusive Wall Street Journal report on China weighing zero COVID exit. So pretty much speaking about that they're trying to move away and move towards reopening. But there's nothing that actually says that they're doing this. It's just more talks and rumors. But maybe that could be what had moved the market. I think that some people were calling that also in the chat.
Something popped. It wasn't a crazy headline, but you could just see that we were sleepy, and all of a sudden the algos got excited. I mean, that's what this market is driven by too. It's driven by algorithmic trading. It's driven by short-term traders. I mean, it's not just high-frequency traders. All your institutions use algorithms. You've got independent traders using algorithms. It's just algorithms all over the place. So, they're all headline driven. They see a headline popping from the Wall Street Journal or from Bloomberg, or from Benzinga or from wherever it is. And obviously, that can change things in a hurry. So this market, all I can say is it's chop. It's had a lot of chop. By you play chop, you're buying dips and selling rips. Again, if I'm picking on specific stocks and specific sectors, though, I'm buying dips on value and selling rips on tech.
Yeah, and I'm looking at BABA to see if it can continue moving. Of course, the China stocks, since they got crushed on that Monday, was the 24th, they've been coming back. And it seems like that's just how this market is right now. Even when you get hit, then all of a sudden you get a little bit of bounce back. But I would definitely be wary about what happens in China. I know I can't even do an overnight trade in a stock like BABA. I don't know about you, Dennis.
I do, but I hedge it with Baidu. I do, but I hedge
a little hedge.
I used to be able to do China versus some other stuff. Now China stays in China. If I'm getting long BABA, I'm going to short another China stock or at least FXI against it. So, because you've got to respect that, we don't know the next headline. Nobody knows the next headline that's coming tomorrow out of China. There's headlines every other day. Zero COVID. No, we're locking down Disney World. No, we're, going over here and, we're talking about invasion. Oh, no, we're not invading. I mean, you don't know what the next headline's coming out over there, but the stocks are so volatile that there's, major risk to just be long or short. So they're oversold. They've been oversold for a long time. Alibaba's went from 300 to 69. From an investing standpoint, I try not to own any of them because I just think that they've torpedoed their own markets for a long time here now, and they don't care. I don't know what turns it. There is value over there, but it's tough. There's value in other places that feel safer.
All right, let's keep going. Let's go to a retail favorite. Will this turn the ship around? Palantir Technologies coming in with their earnings today. EPS at 1 cent, missing the 2 cent estimate. Sales at $478 million, beating the $470.3 million estimate. Palantir reaffirms full year 22 revenue guidance of $1.9 billion towards $1.902 billion estimate. Q4 adjusted revenue at $508 million to $510 million versus the $502 million estimate. Now, they did want to go ahead and let you know that they are facing a negative $5 million currency impact on the prior quarter's guidance, and we expect revenues of $503 to 505 million. So still above their estimate, just not as high as they get hit with some currency impact. Palantir is definitely a favorite. If I'd have to call a monthly support, I'd just use kind of those monthly lows right now around 750. You can maybe use it as the support, but that definitely needs to turn back around and get towards the 9, the 10. But the overhead supply in this stock is also going to be very difficult to get through.
Bag holders everywhere in this stock. And you see it, you get these 1 or 2 day rallies. Like on Friday, I had some hope that maybe we got seller exhaustion in some of these names because we had a turnaround in Roku, we had a turnaround in Palantir, or we had a turnaround in Roku, we had a turnaround in, I forget the other one. Oh, in Palantir, from a bad earnings report. So I was like, well, maybe we got seller exhaustion. Maybe these things could have a relief pop for a couple of days. But then they started to leak right back here again. And then you had the DKNG that did not really work at all. I bought it in the pre-market. I actually did sell it and make a little bit of money. But did you get a feel after the open? You're like, it rallied hard. And then it just started leaking. And then you could start seeing the other ones leak too. And I'm like, oh, man, we're going to have another day where Kathy has a rough day. And that's exactly what happened. When you're trading those kind of stocks, even a Palantir, it's a good idea to keep ARKK on your screen, because if you get the relief pop on Friday, which we got in ARKK, it's like, oh, well, maybe we're holding. And then just, or on Thursday. And then on Friday, they just hit ARKK again. So, ARKK is now dangerously close to its lows here. Once again, 33.74. The overall trend, you're fighting it if you're buying these kind of stocks, because again, just like we said, value is in favor, growth or, no earning stocks or not. It's going to take a long time to turn that.
ARKK, these growth names, will they turn around? I think in the long run, you're going to continue to see these kind of leak. I'm a little bit concerned about names like Palantir. Just continue.
When they don't make, how do you value? If you're a value investor, you don't touch this stuff. And the growth of Momo traders aren't touching this stuff either. It's what we talked about a year ago, the gap. I talk about this gap where you have value investors that buy stocks at PEs 8, 9, 10, 11. They're just like, that's like, not a floor, but it's value investors that come in. And then obviously if the growth investors, Momo guys, they don't care about any of that stuff. The momentum's going, they're buying. The problem is when the momentum turns, momentum says, guys say, I'm out. The value guys are way down here. And that's where you just see this slow death by 1,000 cuts on so names until they get to a point where they may become value stocks. Like a PayPal now has kind of become a value stock. It moved from a growth stock to a value stock just because the prices come down so much. But on a Palantir, they don't make money. So I'm like, well, where are the value investors? They're not anywhere. They're at zero. So, if you don't have the growth investors and the value investors aren't willing to play in that stock, there's no support at all from fundamental players. So you got to look at it from that perspective too. It's safer in a stock like PayPal or in a stock like Netflix, because at a certain point in time, those stocks that were growth stocks trading P's 50 and 60, they came down reasonable enough that the value investors started to come in. So, we are in a different environment right now. We should put our CFA caps on. Chat, you can help us out here too. But PEs matter in 2022. They didn't matter in 2019. They didn't matter in 2020. They didn't matter in 2021, but they sure do matter in 2022. It's a PE market. CFAs are winning.
Let's go towards another health stock here. Let's talk about BioNTech here as they get their earnings out here. Q3 EPS at let me bring the stock up first. So Q3 EPS at $7.04, beating the $4.42 estimate. Sales at $3.48 billion, beating the $2.03 billion estimate. But it got actually hit a little bit on this number in the pre-market. You guys can see here, definitely pulling back a little bit towards support. I like kind of the hourly gap on the downside. That's what I'm going to be watching to see if it can fill and then come right back up. So yesterday's range to last week's range going towards around the 145.75 mark, and then looking for a little bit of a bounce there. We'll see if it gets there.
I don't even have much to say on this, because the COVID problem is this COVID stock, COVID drug. People aren't worried about COVID anymore. There's going to be a lot less people taking boosters in the future. I did the double vax. I got the booster. I can get another booster right now, but I'm like, do I need it? Do I want to keep getting a booster every 6 months for this? And as that mindset continues to change and you start to lose the hardcore vaxxers and they become, well, maybe I don't get another booster, these stocks, are very dependent on us all getting boosters every 6 months, and that's just simply not going to happen. So I don't want to own BioNTech. I've talked about Novavax before. It's the worst run company because, they were all over it. They couldn't get the drug out. Moderna cleaned up, and Novavax could never get the drug out until basically the pandemic was over. So, I don't want to touch any of these plays. The only thing with Moderna, it's got other stuff cooking with the flu vaccines, and they're doing very smart company, very well run management. Different story. Pfizer's obviously diversified. It's a core holding in my long-term portfolio. It's got a lower PE, but you don't, I just can't see jumping in BNTX saying, we're in the vaccine plays. The time to play vaccine stocks is long gone.
Yeah, I would avoid this one. I do like Moderna's chart a little bit more, so I've been focusing on that.
They're just doing so many other things they've got cooking there now too. Yeah. You can really see the separation on companies that they've got other stuff cooking here, and they were so quick on obviously on, and BioNTech was too with Pfizer's help. Moderna did on their own. Like you think about that. BioNTech teamed up with Pfizer to get the vaccines out there quickly. Moderna basically just did it on their own, which is impressive in itself. So I'm very impressed with the Moderna company. If I was buying one of these, it would be Moderna. I think it's best to breed, but I'm just staying away from all of them.
On Moderna, I really like this like push of volume here that came from the bottom when it gapped up. Of course, this was on a gap up, and then what it did is it pushed up through there and held the pullback. That's what I really like. When you hold those pullbacks to an area where it had high volume, to me, it looks like a buyer was in there, watched the stock get up there towards 160, looked for the pullback, and it could have been an ad there around the 140. Now we look for the takeoff through Friday's high, 160.74. That's what I'll be watching on Moderna. Let's go to a different one that I saw the chat talking about. Let's see what you guys think about DWAC today. Definitely getting some movement. And why is DWAC moving? Well, Truth Social SPAC merger is moving off of potentially reports that Donald Trump could soon announce 2024 presidential run. Shares of Rumble and Funware also moving higher with this. Definitely looks to me more like a day trade style vehicle here, but we'll see if it can get back above the hourly into the 25s.
Now you're going head to head with Musk here too. So worst thing that could possibly happen for whatever reason is if Musk went back, or if Musk allowed Trump to come back on and Trump said yes to Twitter. DWAC would just get hammered on that. I don't see that happening, but it's a risk. Yeah. So, I'm always a risk manager. I assess risk. I think the biggest risk for DWAC, other than, they're not, SPAC merger fails or something like that, is if Trump goes back to Twitter. So it's getting the Trump pop. This thing's been so beat up. Bag holders all over the place in this thing too. The market cap just got stupid when this thing went back to 175. Dumb money running rampant all over this thing. I just think, I think rallies are to be sold.
I would agree with that. And one thing I would say is it looks like Elon has said already that he would kind of bring Trump back. So
I know Trump wants to go back, though.
Yeah,
Trump
it's going to be up to Trump.
Yes.
It's going to be up to Trump to determine now. But I don't think it's going to be Elon saying, no, you can't, or you have still a ban. So yeah. I think that at least is off the table. And what did you think about the whole Twitter situation with the verification? Because I know you're verified, Dennis, and you battled to be verified for
I did
a long time. Yeah. So it looks like going forward, Twitter handles are engaging in impersonation will clearly be permanently suspended. So it looks like this weekend, some kind of celebrities and different influencers took their shot at Elon Musk. What they did, Dennis, is they changed their picture.
I saw
and
that.
They put their profile name as Elon Musk to kind of show him like, hey, well, your verification check doesn't really matter. I could put my name as Elon. I could put my profile. I already have a verified check. Now what are you doing? Well, it looks like he battled back. He clearly stated that Twitter will be permanently suspending anybody that has a parody account and doesn't clearly state it. So that's something to think in mind. And then also it looks like the check mark thing is really going to be a thing. Twitter Blue supposedly going to be shifting over a little bit higher price for the verification check. This is definitely an interesting topic, but at least we can't trade Twitter anymore on this because I
No.
think it would be very volatile.
I'm concerned though, like just from the verification, that I hope it's going to work out. Because my problem was why I wanted to get verified so badly is I had these fake, accounts that would, and it was like dozens of them. They were happening every other day. There's a fake account, and what I've said is like a person like me is kind of in the sweet spot to like, to really, like make a fake account for. And why that is that I've got a decent following that, and I'm a money, and obviously, I'm into stocks and stuff too. So, I'll invest for me, but I've got a decent enough following to make it worth their while, but I'm not big enough that people wouldn't believe it's me. So, I mean, if you got Warren Buffett, Warren Buffett just followed me and he wants to invest with me, when nobody's going to believe that. Dennis Dick just followed me. He wants me to invest with him. People will believe that. So, because, I'm pretty much a nobody. So, I mean, I've got a big enough following that it makes the scammers worth their while. And because obviously I'm in the stock market and stuff, people see me as a money manager. So what they were doing, what the fake accounts were doing, is they create a fake Twitter name of me, and then put my name, copy my profile, everything. And if you look at the handle, it's just slightly different, it'd be like a T or an I or something. They change one letter. And then they contact my people that I follow and say, hey, do you, I've just, gotten to, this. Do you want to invest with me? And then they'd ask them for Bitcoin. And then, and then people think, I'm investing with Dennis Dick, but they're not. It's a scam. So what I said was, I want to get verified. So I now look for the blue check mark. But if everybody's going to have a blue check mark, now all of a sudden the scammers can start putting blue check marks by my name and they're going to be scamming again. So it's absolutely brutal. So I hope that he's got that figured out. I hope I don't have to go through this hell, because it's been nice for the last year since I've been verified. There's been very few fake accounts created on me. I'm hoping it's still going to be the case that, maybe they're going to be able to handle the scammers and figure it out. But I'm skeptical. If everybody starts getting a blue check mark, the scammers will blue check mark themselves too, change their names, and by the time we realize it, you could have been scammed. So all I want to say is to everybody listening, I will not ask you for Bitcoin. I hate Bitcoin I will not ask you for Bitcoin. I will not ask you for money. I'm not taking money to invest for people. I'm just trading my own capital. So if somebody pretends to be me, it's not me. I'll let you know if I start a hedge fund. I'm not starting a hedge fund.
Not yet.
Not
not
right
yet.
now.
Not yet.
Not right now.
Never say never. I like to say. But yes, definitely. And Dennis, like the chat said, you're not a nobody, man. You're definitely getting up there, my friend.
No, but I have a decent enough following that, like, if I only had 10 people following me, the scammers wouldn't bother me.
Definitely.
But I got 21,000. It's decent enough following for the scammers to bother with.
Dennis, they
don't pick on Warren Buffett because nobody's going to believe that. Oh yeah, Money Mitch had Warren Buffett contact me on the weekend. He wants me to invest directly with him. Want to do it? Nobody'd believe that.
Don't worry. They even do scam ones on my account, Dennis. So it looks like they have time on their hands. That's for sure.
So annoying.
Let's go to the next top conversation here. Well, let's go over and let's talk about Peabody. Let's do Meta. Meta talk is definitely one of the important talks today. Meta is looking like they could carry out large scale layoffs starting as soon as Wednesday. It looks like this was a report from Wall Street Journal. The layoffs are expected to impact thousands of employees, the report said. So they reached out to Zuckerberg to try to get an answer. He said just pay. He looked at the earnings call. He said, listen to the earnings call. I did kind of state there. And he said, in 2023, we're going to focus our investments on a small number of high priority growth areas. This means that some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. So it looks like he had already given this in the earnings, but it's definitely moving the stock a little bit, getting a little bit of a pop here. What do you think about Meta, Dennis?
Oh, they just want to see expenses starting to get cut here. Investors, it's just been such a disaster. The disaster that we've called on this show for a long time.
Yeah.
Anything like, cutting expenses is going to be viewed as a positive here. Cutting expenses on a company that's firing on all cylinders isn't viewed as positive. It's viewed like, you might see some demand destruction. People just want to see expenses cut here at Meta. So if they're doing any layoffs or cutting any expenses here, Meta stock will applaud that. It's what we're seeing here this morning. It's up 3%. Seller exhaustion here, it's got to be. I mean, the thing has just been absolutely massacred. It is a value stock now. It may turn around here if they can start to figure it out, but I'm just so scared of TikTok that it keeps me out of Meta. This is not a metaverse play. I told you my metaverse play is Disney. I don't know if META is going to, maybe it's going to be a major player in it, but they created $1,500 or $1,700 Oculus glasses and trying to pump them up there, and this is not the time for that. So I think there's better times for Meta. I think there's better value names out there. If you're buying it here and you got a 10-year time horizon, do I think you'll make money? Yeah, I do, but I don't know when this thing turns around.
Yeah, I like the next monthly lows. I'm looking for in the 70s to come into play on Meta, and that's just because I'm using the monthly charts, moving back and back. That would get us into 2015 numbers. And of course, Facebook opened in 2012, so it's not too far from that IPO, and you can just imagine that. This is where it gets a little bit difficult. I asked Joel, and Joel's not here to kind of talk deeper about this, but this is a kind of stock that I also talked to Joel about. Like, do you take profits on a name like this when you're investing long term? Because this stock did get towards 350, right? Imagine if you would have had it in 2015 and you didn't sell. That's tough to go through. And seeing a stock get to such high valuations, but not getting out, and then it comes back towards your entry.
It makes you not want to do any long-term investing at all. I mean,
Yeah.
This is really what we're coming to. As stocks approach 5-year lows or 6-year lows, it pisses you off. I mean,
Definitely.
PayPal, you think about that one. I mean, from 40 to 300 back to 75, you're like, what the hell? I should have been trading that thing. And I've been saying, when you get these bear markets, trading, seems like it's such a better way to go. I will tell you, and people believe, oh yeah, long-term investing, you can't time the market. My trading account is way the hell more consistent than my investing account. My investing account moves with the overall market, and it's having an ugly year as too. My trading account been straight up. So don't tell me you can't time the market. Those people don't know what they're talking about. Is it easy for the guy who's got a full-time job to time the market? No. But if you're sitting here as a day trader full-time, putting your time in, you can get the skill set eventually to learn to time the market. I know a ton of very good traders. Jeremy Newsom, one of them as well. But we know, the good traders that are, there's lots of good traders out there on the Twitterverse. There's lots of good traders at Bright Trading. I mean, there's lots of people who have proven that you can time the market. I'm proof of that as well. There's lots of ways to time this market. Trading right now is kicking the shit, and I'm going to use that word, out of investing.
Well, we'll keep watch there. Let's go towards another stock. Let's go to Peabody here, as looks like Santa's bringing some coal, or maybe you might want coal this year. But let's talk about it. What's going on here? So Peabody Energy rising in the pre-market after the company and Coronado ended merger talks. So they were already set to kind of do a merger with Peabody, but they ended the merger on both of them kind of agreeing to this. And this is actually giving BTU a lift today. This is a stock for me that is on a daily breakout now. If you take a look on the daily, I've been watching this to get through 25 last week. That was the level that I was looking at. Why? Because look at all the kind of price consolidation that we had between 23 and 25. Finally, on last week, Thursday, we break through that. It even gave you a chance. It pulled back right to that level on Friday. You went down towards a low of 24.56. Now you're already at 29, starting to break out. I think this has room to run to 30, but we'll see if it has much more after that.
And obviously energy stocks been in favor here for a while. I'm still concerned that if we go into a recession, energy stocks will eventually hit 2. These could end up being value traps. I'd rather be in drugs, rather be in healthcare. Like I said, the reason I think, and you get the Gileads, which we've been all over here on this show, the reason these stocks are really showing, because even if we go into a recession, those stocks still do well. So if we go into a recession, those energy stocks will start to come in. If we go into a recession, those drug stocks may not necessarily come in. So you find drug stocks with P's under 12, 13, those are attractive right now. Those are the ones I want.
What about oil names and kind of the oil? And I mean, XOM has just been a complete monster.
But I just said, Mitch, here's the concern is that the oil names will not hold up in a recession. The drug names might. So, I mean, I don't know when the recession actually hits. It's not here. We've went out there, going out and looking and doing your homework and obviously going to malls. It's still busy out there. I don't think the Fed stops until they get it to a recession. And when that eventually happens, oil stocks get hit as well. So oil stocks earnings are cyclical. What does that mean? They go very strong during expansions and they get weaker during recessions. So, I mean, we've been, in this energy expansion here for a while. and it's been a great trade. I have missed that trade completely, but I'm not going to jump on the bandwagon here now on ExxonMobil on 112 when I could have bought it at $35 a year and a half ago when it was hated, because, you know, you can look and say, well, P is 9, how do you lose? You lose if it's like U.S. Steel, you know, and this is what's happened with the steel stocks. So how do you lose on Cleveland-Cliffs with a P, a 3, at 25? You know how you lose? When they start to come in from, you know, obviously not selling as much steel. And all of a sudden you look at Cleveland-Cliffs at 13, you're like, oh man, I got cut in half. How is that possible? Well, again, those earnings are cyclical. So you got to be careful when you were teetering on recession and potentially the Fed going to drive us into it, to just buy everything that's got a low PE. Make sure those earnings aren't cyclical.
Something let's keep watch. Now it looks like we got my man Tim Quast in the back. You guys know what time it is. Let's go ahead. Let's get right to the talk. You guys, it's time for Market Structure Monday. I've been learning.
Better backdrop today, Tim.
It takes years of right.
Better than that hotel last week.
Thanks for the GoFundMe campaign that got me out of jail.
We got
really worked out.
Look, we got an upgrade. Where are you today?
Free Tim Quast. Free Tim
That's
Quast
right.
shirt.
Hashtag free Tim Quast. Thanks, everybody.
Where are you today?
I'm in Charleston.
Okay.
So at the fashionable Zero George in Charleston.
Nice.
Yeah. We're here for the month of November. So,
man, you enjoying that November month? Getting away from the beginning of the cold, I see. Skipping away from the cold.
Exactly. It's there was a foot of snow at least in Steamboat this week, and here it was 82. So we're happy to be here. Happy to be here out walking the beach on Sullivan's Island. Yeah, it's a good place to be. We love Charleston. I mean, it's a beautiful historic place. You know, you could spend 2 hours just walking around reading all the plaques on these houses that date from the 1600s and 1700s. It's so if you haven't been to Charleston, there's my plug. It's a great place to go.
There you go. I definitely will check it out myself too. I'm nearby. I'm in Charlotte now, so I'm moving all around. I'm a nomad. I can't stay in one place too long. But let's get into the market talk. Do you think that potentially we could see a big rally with the election this week?
Yeah, I mean, it's a great question, and I heard your discussion about Dennis, your comments about cheap stocks don't necessarily go up, and it's a great prelude to talking about what the market may do on election week. And you're right, Dennis. I always I always come back to this great. I pre-laughed because it makes me laugh every time. The IR guy for a company called Energy Transfer said to me, you know, we learned in the energy business not to say, well, it can't go any lower.
That's true too.
Everything can go lower, and you always, that a stock is trading.
When oil went negative, there we can't go any lower.
Can't go any lower than zero.
Apparently, it can, right?
Oh, I'm going to buy this at $1 because it's got to go up, and then it went to minus $37, and you're like, what the hell happened?
Right. So everything can go lower, and. Will the market rally or go lower on election week? I don't, nobody knows. I can certainly tell you from a market structure standpoint what the math indicate. And everybody's guilty of confirmation bias. And it's a confirmation bias could best be described as believing in something despite what the data tell you. And we're all guilty of it. I think that the government is guilty of it with jobs data. I think everywhere it shows up. So if I were looking at them, this is what I do. I can only tell you what we do with math, and it's just one way. It's not the only way to think about what occurs, but it's very accurate. And I would point out last week, we talked about. I only highlighted 2 stocks: ANET, Arista Networks, ANET, and APA. There are other things I traded. I had a very good week last week. Every day, my trading account was up 2% or more. So It was a very good trading week. And look at those stocks: ANET, APA, both up 9%. the last 5 days. So all you have to do is, I'm not saying it's infallible. It's not. Everything is fallible, particularly human beings. But math works. The math of supply and demand in the market, because of the rules that govern how trades execute, is a pretty good indicator. So what is the market telling us as we arrive at the penultimate day before the elections? Well, broad sentiment is at 8.2. Believe it or not, we've only had 5 8 handles since in the entire Edge data set, which goes back, apples to apples, it just goes back to July 2017. But that's 5 years of data. Only 5 times has broad sentiment been above 8. 3 of them were during the period of the pandemic when everybody was using their COVID checks to trade meme stocks.
Yeah.
So excess cash. One of them came in January of 2019 when the Fed reversed its tightening policy. So the Fed started to shrink its balance sheet. Finally, we forget about this. The balance sheet from the financial crisis, they started shrinking it in 2018, and they brought it down about $500 billion, and the market fell apart. Do you guys remember that? December 24, 2018, the Dow went down 1,200 points. Had never done that before. So then the Fed stopped what it was doing, and we got an 8 handle out of that. And the 5th one is right now. So what makes this one different? Well, it's the only 8 handle that we've had during a period of tightening instead of excess. So I don't know what's going to happen, but this is what I will always look at. What is broad sentiment doing? What is supply and demand doing in the S&P 500? And that's what this is. So SPY and the algorithm that meters buying and selling by investors and traders. And here's where we are as of Friday. Demand, the algorithm is way above the red line that tells us to start to get cautious. And the supply side, which has been in a big deficit, is still at 48% and has stopped falling. Those conditions, to me, do not herald we're off in a bull market again. I'm not saying that the market won't go up. I'm saying that these conditions generally precede a pullback, almost always. In fact, I pointed out to the Edge users that generally, when we go over the red line, stocks, the mathematical propensity of the market is a return of a negative 5%. Well, the market is now lower than it was when we went over the red line. That Friday was a good day, but the market was down 1.5% last week. It wasn't a great week. And so I look at this and say, no, and people will misinterpret this. So suppose that one side or the other of the political spectrum does well and the market declines. Then everyone is going to say, well, it's because of the outcome of the election. Well, these data precede the outcome. The data preceding the outcome say that the market probably will have a higher probability of declining. Maybe it's slow. I think that we will go into a slow slide. That's what I think, because that's what tends to happen after a strong top like this. But I don't know. That's what I think, Mitch. That's a long-winded answer, but that's what I think.
Nobody knows anything, but
No.
I mean,
Right.
Can we lay out scenarios here? I mean, Republicans appear to be winning in the early polls, but we know that doesn't mean anything because things can change very quickly here.
Right.
I mean, let's just set up the 2 scenarios. It goes red or obviously the Dems. What do you think the market wants to see?
Well, markets always love financial and fiscal responsibility. They do.
Yeah.
But neither side has demonstrated it. So I don't know if it makes any difference, right?
Yeah.
There's a belief that one side is more fiscally responsible, but if you look at the data, both sides have spent like drunken sailors. So I don't know. We will see.
We'll probably more continue to that. But what about our big tech, right? I mean, I think that's one of the best ways to watch this market right now. That's what kind of led this move down here. And will it continue, or will these kind of turn around?
Right. Will big tech recover? Well, at some point it will. I was just beforehand, I was listening to a television show on the markets, and Barry Diller was on, who is always, he's a very, he's a quirky guy, but he's a very interesting fellow. And he commented about Facebook. He said, when you change your name to something that does not exist, that's kind of odd.
Yeah.
And
Yeah.
I think it was a major, as a major gaffe. But if we look at Meta just as an example, look at the demand. It can't even get over 5. So that's how I would think about it. When will big tech recover? When demand returns to it. You say, well, that's a cop out. Well, no, it's the truth. It's the truth, and who will drive that? Well, the money that gets allocated to models, stock pickers to some degree, they're only 10% of the market, though. Realize that they're only 10% of the volume of the stock market. No, even though 98% of the time that we listen to things or read things is dominated by people talking about the fundamentals of business, the fact is only 10% of volume is actually driven by that. So when the money comes back to big tech, they will recover, and you will know it this simply, traders. And this is what you should do. This is confirmation bias. Don't talk yourself into trading things that have insufficient demand, because you will lose money. It's that simple. So when demand gets back over 5 and stays there consistently, those stocks will recover. And you could look over 6 months. This is the only period where it made any kind of sense at all to own Meta. Even here, you can make a little money, but as soon as the supply side or the demand side moves, demand comes down, supply rises, you should be out. That's the thing that should drive your decision as a trader. If you have long-term investment, fine, but this is how you should think about big tech to me.
Tim, let's look at Apple. Because
that's exactly what I was going to call
Me and Mitch
out.
were both going to grab it. We had to go to it. I mean, it's got bad news here again. The stock just seems to go down. It seems like every day for the last week.
Yeah,
I don't know if that's true or not, but what are you seeing in Apple?
So we talked about this last week. I tweeted it. I said, generally, so I said the demand side is really good, but the supply side is rising at the same pace. So any gains will be difficult to hold. Those are just conditions that we know to be true. And the moment that demand began to slip, the price fell. So you can know this, traders. You can know this before a company reports results. Always check supply and demand. It will generally tell you what will happen. So Apple had very strong demand ahead of results, but it also had very high supply. And so it's very much like any market. If you supply a lot of product to a market, but the demand is there to consume it all, then prices don't rise. Prices only rise if demand is greater than supply, right? And so if the two are tracking each other, going to be very difficult for prices to hold. And sure enough, that was true. When was it awesome to own Apple? Well, we can look back and you could do this. You could do this with your whole portfolio. Keep your portfolio. If you want to have a long-term portfolio, keep it biased to stocks that have more than 5, that have 5 or greater demand, because that stuff will outperform the market. And here was the great time to own Apple. Right there, demand was very strong. Supply was pretty high too, but it wasn't rising. So demand outstripped supply, price went up. The moment those conditions changed, down it went. And there's been one brief time here where it's been good to own. The same thing's true back here. Right. Yeah. So right now, no, you don't want to buy falling demand. That's catching a falling knife. You don't want to do it. Just wait for it.
I mean, that's really what your system is designed. It's showing you the momentum is really what it's doing. It's showing you where the money is going. Exactly. And obviously, we know momentum can change and things can change, but it's kind of showing you where buyers are tending to go. It's giving you that overall look.
Exactly. That's it. And I prefer to buy stuff that at a price that is better than where I sell it. That's a general rule.
Well, that's kind of the idea.
Well, can we do one more, Tim? Yes. Can we do Tesla here? Because Tesla. I feel like it's been hanging on for a while now, and it's really close towards important support here, with 200 underneath it. Wanted to see how market structure Edge has it.
It's not bad. It didn't get to 10, so it stopped rising at 9. The supply side is trending. Well, the trend line of the 30-day trend line is slightly down. The shorter term, maybe 5-6 day trend is down. Those are pretty good conditions. They're they're not awesome because it didn't get all the way to 10, but they're not bad, and that's why the price is hanging in. I'll expand out to the year-to-date view once again, and you can see whoops, I just booted myself. Apologies. You'll see that the same principle holds true. The more time that Tesla spends above 5, the better it does. Back here, very, very strong demand. Here, very, very strong demand, the green part of the graph. And if it's not staying above 5, you're not going to, your money is wasting time. That's all. You want your money to constantly be producing returns for you. And this is kind of odd that it hasn't risen as much as you might expect with this kind of demand, but it's affected by earnings. Exactly to your point.
Any thoughts on certain stocks to trade during this big election week?
So notice this Benzinga November 7 portfolio. It's diverging supply and demand. That's what I'm always looking for.
Oh, that looks good.
Right. So the stuff in here, there are 6 things in here: consumer discretionary, slightly overweighted in this portfolio, fast trading leading, very short-term horizons, but awesome supply demand imbalances. That's what produces gains. So if I'm going to trade anything, that's going to come out of this group. I went wholly to cash on Friday, so I can, because I don't trust what the market's going to do at the open today. So I'm going to, that's why I wanted to be sitting in cash, and the market gave me that opportunity. I got out of the positions that I had, and they all but one was good. LPI, I had to write it all the way back, and I still lost a little bit on it, but everything else was good. So here are the things. Antero Resources, it's not all the way to a 10, but that, because natural gas has excess demand, could be a good place to go, and it moves 5%. You can make, that's your expectation. I look at these things to tell us what's an expectation of a return, and that's what I'm after. Nike, Sunrun, which had a great week, could give us more because it's 10. The supply is trending down. It's only 38%. That's a big supply demand imbalance, and I'll show you that one. Dexcom, Win. This is a strange little financial company, but it looks good. RNR. I would look at all of those. I don't care much about what industry they're in or what their financials are. Always check the earnings calendar. I haven't checked to make sure that none of these folks are reporting. That can change outcomes. But all of those have supply demand imbalances that should give us returns. And here's Sunrun, because it's just, I mean, it's a classic example of what you want to find. Look at that. Very strong demand, falling supply. Most times that'll produce gains. Could be as good as 10% yet in Sunrun.
How do you know when you take your gains here, Tim? Like, you obviously, we can all jump in and this looks good. How do we know when to take the gains?
So let's use EQIX, which was a stock we highlighted for edge users last week. Said this is a great stock to trade. Here's when to leave. So it produced great returns, just awesome returns because of diverging supply and demand. But now look at this. Here's your answer, Dennis. Once one side or the other begins to change, I'm probably already out of that. You can say, well, that's still a supply deficiency. Yes, it is. But if I've made my whatever, and that stock is a 10% or better gain, as soon as the supply side changes, I'm out and I'm looking for the next thing. Sunrun, something like that. But that's the signal to me.
Just a question, just for as if I was a user of Market Structure Edge. So will that data point come out after the day is done, or would that data point be even in the intraday action?
This will be, so when would you know, right? So this is the data I would get today. So I'd be looking to leave this stock today.
Okay, perfect. That's what I kind of wanted to get to there. Yep. So it's kind of like, how do you really use it, right? You've seen it. Now you've seen the turn. Now Tim would be looking at today to see, okay, today is going to be where maybe it could be the day where I'm going to run and take those profits.
Right. And it could very well be that Equinix is up today. But the math is telling me, and see, this is confirmation bias. Don't you say, oh, it's going up, I'm going to stay in that. No, take the money, don't look back, find the next thing. Because staying in it is taking chances, not gains. And you want to take gains, not chances. That's the way to do it.
Love it there. Definitely. If you guys want to use this, also check out Market Structure Edge. Throwing up the link right now. You guys can check it out, and you can get a trial if you want to check it out. Just maybe test it out yourself. See how you like it.
That's right. And we've talked about this 30-day trial. It is actually in effect. There are a few little message things now, but you can actually use it for 30 days now instead of 14. Yeah.
Hey, well, you guys check out market structure for yourselves and check out the edge that you can be using to trade every single day. Appreciate you coming on, Tim, and we'll have you back.
See you guys.
Enjoy that vacation.
Have
a good one. All right, got Tim out of here. Let's go into the market and see what's going on. How do you feel we're doing right now, Dennis? Do you feel like we're hanging in there?
We're just chopping around. It's going to be continued chop. We're going to be choppy into the elections. We're probably going to be choppy after the elections. Momentum is tough. I mean, Tim's short-term time horizon, so he's getting in and out on some of these little momentum plays and finding little edges in his system. But if your holding period is any longer than like 3, 4, 5 days, it's been a really tough market. Swing trading's been tough because those trends just aren't persistent. I mean, energy has been pretty persistent. And again, you've got to identify the overall trend and be buying dips on stocks that are trending up and selling rips on stocks that are trending down. That has held for a long, long time, and that continues to work. And it's pretty much what Tim Quast's system, does. But I mean, we look here, just, there's so much news. We're going to get some big earnings again this week. Obviously, we got Apple news today. We got Meta news here today. We've got, the midterm are going to happen here. There's your earnings calendar. There's a ton of companies reporting too. Disney's probably the headliner for me if I'm looking tomorrow night. Obviously, I have a position in Disney, so I look at it from that perspective too. But this market, you've just...
AMC, man. Come on, the apes. Nah, I don't expect too much from that report, but definitely. We got to watch what happens to some of these reports. I like this week, actually, because these are kind of the smaller stocks. And sometimes these smaller stocks can have big moves, of course, because maybe the expectation's off a little bit. And we get some insight into gaming. Also, Mosaic is one that I'm watching that reports after the close today. You got Take-Two. What do you think about the gaming industry? It's going to be fun to kind of see if they can at least show some demand turnaround. If not, I think this could go lower also.
I mean, I'm a fan of the gaming stocks. You know that. But, I'm not in. I recently sold my EA, obviously. And I've said on this show, I want to rebuy my Take-Two. It's coming into a level where I'm interested. Do I want to buy it ahead of the report? There's always a risk. I mean, when you're taking into the report, I'd almost like to see what the numbers are and get a better feel. Stock's trending down. It's not a super cheap stock, but I do think the gaming stocks are going to be metaverse plays in the long run. So I like Take-Two, EA long term. Short term, I have no position in either of these. I'd like to get my EA back eventually. I recently sold it. I'd like to get my Take-Two back, which I sold up at 124. Obviously, I can scalp myself some money here right now, but I just don't want to jump in ahead of an earnings report because it's just a wild card, right, Mitch?
Yeah, definitely. It's a wild card. And I can tell you for myself, even times where I feel convicted in earnings plays, I just don't play them because it's too difficult. Like Dennis and I were talking about it in the pre-show, is like, even if I had the report 5 minutes before it's coming out and I had the numbers, okay, beat and a beat, does that really mean I can play towards the upside? Not always. Not always. We've seen it in this market. And that's just how it's been. It's been definitely one of those markets where even if you have the actual catalyst in front of you, sometimes good news is bad news is good news. And we've seen the algos make big mistakes, I feel, in the last year. And a lot of this is because of the conflicting news that we get. Now let's go and take a look.
Sometimes good news is interpreted as bad news. To your point, you could have an insider that's actually got this report looking at it. They could actually lose on the trade for the simple reason is that the reaction is much different than what you would think from reading the report. My one buddy, at Bright Trading was just saying we need to stop reading reports because, it's moving. A lot of these smaller companies are just moving on whatever, and don't discount the credit. Like, it's one thing, Apple's and Microsoft's, those are high volume stocks. People can't push those around. Those little companies, lots of those get reported, they get pushed around. You got a hedge fund's got a big position long it. They might, say, okay, I want the stock higher, and they come in the pre-market after the report and they buy a few shares. And then all of a sudden it's like, oh, it's going up, and people get excited, the momentum traders go up. That happens out there. On the small and mid-cap stocks, they are manipulated to a certain extent by major players in the market. I don't think it happens with the Apples and the Microsofts because the volumes are too high, but on the mid-caps, it can happen. It absolutely does happen.
Definitely something to keep watch. We'll see what happens with these stocks. I'm going to be watching Apple, of course, to see if we can turn around. Of course, it does have monthly support right around this level. We've talked about how it held that level yesterday, Friday, 134.38. We'll take it out today. That's kind of a level that I'll be watching. What's on your radar today, Dennis? What's kind of the bogey to
Keeping
watch?
an eye on Apple. It needs to hold that low. It's critical, obviously. The double bottom is in place. That's the good news. I think you could find buyers on a pullback in Apple short term. I still have my long term. I didn't take my hedge off. I mean, if I wanted to release the hedge, I could do it now, but I'm still hedged for the simple reason the stock's not cheap. 134.37 is the number, though. That was the double bottom, 134.38 from November and obviously from October. So nice double bottom in place. That's the level it's got to hold.
All right, we'll see what happens today. I will get you out of here, Dennis. And like always, we'll see what happens. And Joel will be back tomorrow. So don't worry, team. We'll definitely have Joel back tomorrow. Election day tomorrow. And stay tuned. Joel has a special guest for us tomorrow that's going to be talking about election bets. It's going to be fun to talk about it. It's been a while since we had it on. He's actually been on before. So if you guys have been with us during an election day, you probably heard about it. But Dennis, have a good day. Go do what you do best, my friend, and go try. All right, we'll see how the market does today. Now we'll get you guys over, and I want you guys to check out the Future of Crypto by Benzinga. This is our event on December 7th that I want you guys, of course, to go ahead and go to New York. Go to New York City. Go check out a little vacation time. And if you want, I gave you guys a little bit of a discount here. Money Mitch 20. You guys can use that discount to get a discount to the Future of Crypto event. Don't miss it, team. The Future of Crypto. We're going to have Yuga Labs. We'll have Kevin O'Leary, Josh Ong. You don't want to miss a team. And some of my favorites, definitely even Matt Higgins, one of my favorite, definitely to talk to. And I'm trying to get out there, team. So give me the thumbs up. Check out the Future of Crypto. And if you want to use that discount code, by all means, I definitely appreciate it. Now we'll get you over to some live trading action. We got a great day for you. Benzinga TV is going to keep at it. We got live trading, Benzinga Live, and of course, stock market movers that will be coming up next. You don't got to go anywhere. This will redirect you. Let's get right into the market action and see if we can get into the green today. Let's get it, team.